Good evening, everyone. It's time to get ready for the week and analyze GME before the market open and before we can start taking a look at the 24-hour trading on GME going into this week. If you like this video, go ahead and smash that like button, and if you want to follow along on some of these trades, go ahead and subscribe to the channel. And then if you'd like to be a part of these trades, feel free to join my Discord. That link is in the description, and I hope to see you guys there soon. So, going into this trade, what I'd like to do is kind of highlight a few things that I'm looking at. Each week that I've started off these videos, I've kind of started on the weekly time frame and then worked my way down. So today will be no different. I would like to start in that weekly time frame and then see kind of what we saw on Friday and how to really kind of set ourselves up for next week and kind of the moves that we're expecting this to make. So when taking a look at this, the levels, I mean, there's been a lot of analysis going on Reddit, YouTube, many different locations. But what I really want to highlight is some of the things that we saw on Friday and Thursday of last week that kind of really don't make sense on the overall trade. But what I will tell you is that there is no level of concern that has come in yet for our open positions and for the analysis to kind of be broken down or no longer valid. So what I'm going to do here is I'm going to start off by kind of highlighting this level at 2380. Okay, you'll see a lot of my levels that are up to about $24.92 are always mapped out in green. The thing that makes the most sense for that aspect is, if you think about it, there is a buy low, sell high. I mean, that's how you make money in the market. But when looking at this, I really want to kind of explain why these levels are so critical. The reason why they're critical is some of it has to do with both the open interest and volume at certain strike prices. And then the other part of it is these levels, as soon as we come down to these levels, we've either seen, gap fill reversals, coming down to a different moving average, and then having that momentum to bounce off of that moving average. So what I want to start with is what kind of got me back into looking at GME, from a daily time frame, was around this movement here when we were going to that 200-day moving average. So you can see right around Monday, March 20th in 2023, if you look here, we came up to that 200-day moving average and then broke back down, got back above. And then really in this pivot area in June of 23 is when we really started kind of deviating off of that 200-day moving average. You can see the 200-day moving average, obviously this is more up to date here, but the critical part of this is we were on this bottom channel, and only a few times we broke below that bottom channel. So when we saw the run up off this bottom channel, it was almost identical to what we had seen previously, where there was bounces or there was momentum where it had pushed up. So what I'm looking at for next week is, do we see where we come down to this 200-day moving average? So this 200-day moving average is sitting at roughly $20.40, okay? Not far off of the level of 23.93 or 23.80 that we saw. We also saw this come down to this support the week prior. So that was at $22.67. So coming down to the $22.67 mark, we immediately came back up to this $29 level. So what makes sense to me is that this is on the weekly chart. We had a low, and this was a lower low from the week prior, right? So higher low, higher low, higher low, and then come down to here, broke down, and then set a new low, and then we did not continue the trend of setting a higher low. But what we did was we set a higher low from the week prior to last week. So it wouldn't be far off to see us regain this level in the upper channel that we've mapped out, and that's right at that $24.92 mark. If we and I've mapped that level out, probably for the last 3 weeks for you guys. So if we get to this level, right, then we can kind of see this step process, and then we may actually reject off of this upper channel. So this was the original upper channel, and then I added this recently because of the fact that we did not set a secondary low, right, or a new lower low. So we stepped up, we broke this, and so what sticks out to me is, if you think about this, this is exactly mirroring kind of what we saw prior. Okay, so higher low, higher low, higher low, then broke this, right? And there was a push down. Okay, and you could see this is all around this 200-day moving average. So when we came up here, this was expected, right? So then we pushed up, we tested this, the upper channel, right, at 39.82. So this is our original upper channel. Now we have a secondary upper channel that has kind of given us a trend. Okay, when we're coming down here, we broke below this. So I no longer want to just use this lower channel because we're at like a central pivot point in the overall channel. So when I'm getting excited for this trade going into next week, it doesn't have anything to do with, one person in particular or the flow associated with it, nothing like that. What the chart shows is that we are mirroring movement from how we traded previously. And I can go back to 2020, 2021, and a lot of the time it looked very similar to what we're seeing today. So I want to make sure that everybody understands, in this window of time, we have not invalidated this trade. So what I'll do is I'll remove some of these levels and some of the drawings that I put on there. And when we go back to this daily chart, okay, this is where it's almost too easy to see what's going on with this trade at this point. So we could draw this rectangle. You guys have seen it before. Okay, this rectangle here, also known as barcoding, has been highlighted for weeks. We talked the other day, we were on day 8, we were on day 7. Now we have 9 days where we have barcoded in this area. So we're no longer at the top part of the barcode, we are at the bottom part of this. We are right at that channel that we've been talking about. We are right at that $24.92 level that has been highlighted many, many times. Until this breaks down, and until we see a complete breakdown out of this barcoded area, this trade is not invalid. If we want to sit here for 4 more days, if we want to sit here for another week, that's okay. The trade is still valid. The things that I'm looking for on this daily time frame that are different than the weekly time frame, I want to make sure that these are clear to everyone. This level is acting as resistance for us to break up. We gain support. I highlighted this red for a reason, because going into next week, this is a pivotal level, right? It used to be where this green level was. You are talking about something that is separated by less than $1. If we stay in this dollar chop zone, it doesn't create any more concern. It doesn't make us panic. It doesn't any of that. What that shows is continued indecision on what this trade is going to do. I can easily see where we regain this level here. Then we come back to the top part of the barcode. It would make sense for us to see some resistance there. Then we would come up to this level, and it would look something like this. Obviously, this isn't a clean mark, right? This isn't a clean trend. But what I'm looking for is to regain this level on the channel, regain that 24.90, and then step up to the $29 level, right? There's not a whole lot of resistance. There's not a whole lot of support. There's not a lot of things in here that I would want to map out and use them as a pivotal level. The only one I would tell you that to keep an eye on is right around $28. This is why we have maintained our open position at the $27 calls because of this reason. At $28, right, we're in the money. There has to be a decent amount of movement. You're talking about $4.10 worth of movement. We have seen candles in a day go from 22 and range all the way up to 31. $4 is not something that's going to make or break this trade. We have seen candles where they've ranged from 24 to 38 and many, many more, right? 31 to 47. Those are $16 candles, $10 candles. We are talking about a $4 candle that could completely change the outlook of this entire trade. We haven't seen any updates from Keith. We haven't seen any updates from Ryan. We haven't seen many updates from a lot of the people that have traded this stock for a long period of time. We can put on our tinfoil caps. We can do a lot of different things to see what we're going to think is going to happen, or why the setup is there, or do a market analysis, or look into what this tweet meant, or what this post on X meant, any of those different things. But what this chart represents is a trade that is completely valid. I'm not going to grow concerned. We have seen zones exactly like this before. When you look at this, looks pretty familiar. Looks pretty similar to what we're seeing right now. You had a 3, 6, 9, 10 days, right? 10 days of validation. 10 days of accumulation. Why would I grow concerned in this area, or not concerned here? Have some of those engulfing candles, right? I'm not going to grow concerned here. There's no reason to. There's absolutely no reason to become concerned suddenly because we're not moving the way we're used to. Well, if anybody's been in this since 2021, there's a lot of areas where we could have grown really concerned. This 200-day moving average has been used as a catalyst previously, and it could be used as that again. If we want to use that 200-day moving average, if they want to push it down on the daily time frame, it's at $18.41. If we want to push it down, I really hope that everyone is prepared, because if we truly use this as support, we are going to see a major bounce off the 200-day moving average. If we go down and we look into a shorter time frame, 15-minute time frame, right? I'm going to go ahead and erase this. We are right at this channel. In the Discord, I talk a lot about these barcoding areas, these false breakdowns, the regaining of support. Look at this level on the bottom of this area. 23, 57, 49, whatever you want to call it, 23.50. This trade is just as valid as it's ever been. This trade is possibly poised for a bigger run than we've seen before. Do not lose faith in the trade that you're in. There's been much lower levels. We were at $9 not too long ago. We were at $10, $12. We were at, the $15 range. We were, making 800% on $15 calls, $17 calls. We were making a ton of money not too long ago. There's no reason why we can't hold a little bit longer on this trade. There's no reason for it. We have no idea what this week will bring. If you guys remember, from May 31st to June 3rd, what happened? We saw this start to run in the 24-hour market. Then we saw it running again in the pre-market. It's easy to forget where that momentum can start. The original DD highlighted that these runs would start in the pre-market, in the after hours. They would start whenever they wanted to, right? This movement on the 15-day, or 15-minute, you can see where that 200-day moving average is. We rejected off of it. We fell hard. We came back down and we regained support right where we ended up trading at the end of the day on Friday. I'm just as bullish as I've ever been. This whole zone here, you could even, if you wanted to, highlight that this is another barcoding zone. We can do that if you'd like. If we're looking at this from an overall perspective, we are right where we want to be. 200 days coming down, right? On the 15-minute chart. It's at 26.23. Where are we at right now? 23.93 at close. We fell a little bit further in after hours. Not concerned. Not even in the least bit concerned. So what I'll challenge everyone is, let's stay bullish as ever. Remain zen. Remain just as optimistic as you've ever been. And let's be ready to trade this week. Have a good night.